Hey guys, this is Market Update. I want to tell a story of two different kind of groups of market participants. Over the last 12 to 18 months, the institutions have come in and taken Bitcoin away from us, kind of online community that saw, early adopters, right? Saw the thing grow, and all of the things that we worry about and talk about, they're not really that relevant anymore because Wall Street has just come in, taken Bitcoin, and it's moved it to their rails, which is way more trust, way more security. Everything was take self-custody and hodl, but the reality is 99% of the world aren't early adopters and don't want to take self-custody of Bitcoin, in a wallet with a 12-word seed phrase. They're just going to buy through the ETFs. They don't care about Bitcoin in the same way as us. And it doesn't matter because that money is coming in, right? Sovereign wealth funds are buying it. Countries are buying it small, like central banks of countries. Small countries are starting to buy this. US states are buying this. This is a successful network. And it doesn't matter if it goes sideways. It's gone sideways as I think the kind of early adopter community, they aren't the mature holder community. It's a change of communities here, right? From people that love Bitcoin, finally they get this opportunity to sell out after 10 plus years or whatever, right? You make a huge amount of money. The community coming in are different. It's Wall Street and investors that just say, okay, put 1 or 2% in Bitcoin. That's great, fine. They don't care about hodling. They don't care about that. They're not going to be online. They're not going to be on X talking about anything. They don't care about that, right? Just put some money into it. Got some money to invest, great. It's different. So the narrative changes. The online kind of amount of attention changes. That doesn't mean Bitcoin's going to fail or go into a bear market. In fact, look, where are we? We've broken through the 50 period. We've broken through the 100 period. 200 period is like an absolutely terrible bear market. I would say that is, look, if we get some financial crash worldwide, we could easily get there, right? But it's just a different participant now, right? Is that they don't care about the Bitcoin stuff. They don't look at on-chain indicators like we do. They don't talk about, all of this crypto, everything. That's irrelevant, right? They don't care about anything. They just look at Bitcoin, 30% off the all-time high. I'll start just allocating. Sure, it goes a bit lower. I'll allocate some more. So if we don't get some crazy worldwide financial crisis, why would you dip 70, 60% from the all-time high, right? In fact, what we're in is just a very slow and steady rise in the price. And Bitcoin is at trend, as you can see here. So this is the true market mean. So if Bitcoin is at trend or below, it's typically extremely good value because you've got an asset growing at 40 to 50%. When the price is very high in relation to that, then the price you're getting isn't good because essentially, look, if a 40% gain for a year was like average and it's gone up 150 to 200%, then you're probably buying slightly above the trend. If you're buying when the price is at 40% or if it's flat for the year, then you're buying underneath the general growth rate, which is fantastic. You're getting pretty decent priced BTC, right? And that's where we're at right now. So I think if you just take a step back, if you're buying anywhere near the realized price or the true market mean or underneath that, it's fantastic value. Don't worry about where the price is 1 month, 2 months, 6 months, right? We don't know, right? But if you're buying at trend, you're buying this asset that's growing 40 to 50%, that's good. Because unless you think Bitcoin's somehow going to fail, you're in Bitcoin, you're watching this video. So if you're buying at the price trend, that's great news, right? And you can just buy and hold, you make returns, just waiting for the asset to grow. So look, we're at the 100. Can we go lower? Sure, right? We don't know what's going to happen. But at the start of next year, you've got banking liquidity coming in. You've got some deregulation on the banks. You've got the big, beautiful bill, which they've said could put $1,000 to $2,000 back in the hands of, people that work for tips and everything like that. Some stimulus. Look, it's not crazy. Nothing's crazy happening. It's not 2020. It's a decent outlook, right? So absolute worst case scenario, I would say, like down here. But we're at the 100 already. We're trying to bounce from this. And things feel fairly okay. And that's because the institutions are here. And they don't get worried about Bitcoin being down 30% from the all-time high, right? They've got money to invest. And so that's what they're doing. If you trade Bitcoin and crypto, check out the Bybit deposit bonus down below, up to $30,000. I'll leave the crypto course link down there as well if you want to know how to get set up investing in Bitcoin and everything else, putting a portfolio together. 300 videos in the crypto course. You can ask me questions in the Discord server as well. I'll link that below. Is something going to happen in the next few weeks to drive us to all-time highs? I don't think so, right? In fact, I hope we go sideways or down this year. I hope it's a red year so that everything can be reset and all of the cycle stuff is just put out the way. I think what's happened over the last 3 years, and you can see that this is a very long drawdown. This is a 3 sigma event and the longest drawdown in the business cycle since 1948. So the last 3 years in Bitcoin, you've had the ETFs come in, huge speculation, new money coming in. You had 2 up years of 150+%. And then this year, everyone took profits at 100K. That's been it for the last 3 years, while the business cycle has gone sideways, not growing. So what's going to be happening? Well, next year, it looks like they're starting to support the business cycle higher, which is correlated to Bitcoin doing well as well. So 20 billion a month here, 25 billion a month here. Now, it's not QE, but it is liquidity, right? They're printing money, they're buying bills, they're going to help the government. You can see what's happening here. The SLR is going to come in, which can increase liquidity from banks as well in January. I think they can start implementing it in January. Things look constructive in my opinion, but look, if it's not Bitcoin, it has to be something else, right? These are major currencies valued in gold. You're valuing debt and gold, right? You got to buy something. If it's not Bitcoin, if it's not gold, or if it's not your house, it's got to be something. If it's stock market, gold, Bitcoin, something, just not currency, right? You've got to save. Any government currency ever that has ever existed has been debased, even metal-based currencies. This is the Roman denarius, right? Percentage of silver content goes down and down and down. Anything that someone can control and debase will be debased. And I think Bitcoin is the strongest here because it can't be debased. That's the whole point, right? But you got to buy something if it's not Bitcoin, something else, because you can't be in dollars or paper currency because it's going to get debased. If you buy crypto, check out Bybit. You can get a deposit bonus up to $30,000. And the crypto course, I'll link down there. That's how to invest, not just in crypto, but how to put a portfolio together to actually beat inflation and save your money over time. I'll link that down below as well. I'm James, this is Money's EG. Cheers for watching, and I'll see you in the next one.